The Japanese yen finds itself in a precarious position once again. As we approach the June Bank of Japan policy decision, US dollar to Japanese yen has surged back to the pivotal 159.5 level. In this video, we'll uncover how skyrocketing oil prices are weighing down the yen, the crucial significance of the 160 psychological barrier, and how the upcoming BOJ meeting could spark dramatic shifts in the market. We're standing at a historic crossroads for global foreign exchange. So, what makes the 160 level such a critical threshold? This range has acted as a multi-year ceiling, shaping Japanese currency policy for decades. Recently, the yen has experienced significant weakening, leading to discussions of potential intervention. The market is once again testing this crucial ceiling, which is more than just a number. It symbolizes a boundary for the Ministry of Finance and global traders who are assessing Japan's tolerance for a weaker currency. With the rate differential between the US and Japan remaining substantial, the dollar is becoming the preferred carry trade currency, intensifying the pressure on the yen. What's driving this recent spike toward 159.5? Analysts point to oil-driven inflation as a major factor. With global oil prices on the rise, Japan, an energy-importing nation, sees its currency weakened by the soaring costs of energy imports. This inflationary pressure amplifies the existing challenge of widening interest rate differentials. As the U.S. Federal Reserve maintains higher rates for longer, the Bank of Japan's cautious stance creates a perfect storm for yen depreciation. Traders are keeping a close eye on energy prices, as they could signal the next move for US dollar to Japanese yen. Should oil prices continue to rise, the BOJ may find it increasingly pressured to take action. The market reaction is palpable. On social media and trading floors, one sentiment reigns: all eyes are on the 159.5 level. Verified traders are marking this price point as a key inflection for Asian markets. It feels like the calm before a storm as participants hold their breath for the June BOJ decision. With no significant global news in the past 24 hours, attention has sharpened on the yen. Many speculate that failing to breach 160 could result in a swift correction, while breaking through may lead to unprecedented territory. The consensus on X is clear: the yen's fate is intertwined with global macro flows and energy prices. Expert analysts are divided yet laser-focused on one pivotal event, the June BOJ policy meeting. Some argue that the BOJ is being cornered by the weakening yen and escalating oil prices. If the BOJ opts for a dovish stance, the US dollar to Japanese yen pair is likely to test, and possibly break, the 160 level. However, a hawkish surprise, like cutting bond purchases or hinting at an earlier rate hike, could provide the yen with much-needed support. Analysts stress that the widening rate gap between the Fed and the BOJ continues to overshadow domestic data. Without a decisive policy shift, the yen's downward path seems hard to reverse. The Nikkei 225 is feeling the effects of this currency turbulence. Traditionally, a weak yen benefits Japanese exporters, but the current rise driven by oil-induced inflation presents a double-edged sword. Domestic companies are grappling with increased import costs, which could erode profit margins. We're observing a divide in sector performance, those benefiting from exports versus those reliant on domestic consumption. Traders view the 160 level as a potential tipping point, where the advantages of a weak yen may be outweighed by the burdens of imported inflation. The stock market remains in a wait-and-see mode, reflecting the tension in the FX market. This situation extends beyond Japan; it's a global macro event. The movement of US dollar to Japanese yen towards 159.5 affects broader Asian markets and foreign exchange flows worldwide. As the yen weakens, other Asian currencies face pressure to stay competitive. Moreover, the correlation between oil prices and the yen has become critical for global macro funds. Should the yen break through 160, we could witness significant shifts in capital flows as carry trades are reassessed. Geopolitical risks and energy price stability are now tightly linked to the yen's performance, making it a vital indicator for global risk sentiment in the weeks ahead. So, what should individual investors consider at this juncture? The key takeaway is to approach the BOJ meeting results with extreme caution. The 160 level is a significant psychological barrier, and we can expect heightened volatility around this point. Avoid blindly chasing trends at these heights. Instead, focus on critical indicators like US Treasury yields and crude oil prices, as they currently shape the yen's trajectory. Risk management is crucial, whether you're trading FX or Japanese stocks. Acknowledging that the yen is at a multi-year range ceiling means both sharp reversals and breakouts are possible. Stay informed and await confirmation from the BOJ. Our AI analysis outlines 3 potential scenarios following the BOJ decision. In the basic scenario, the BOJ implements a modest reduction in bond purchases, leading US dollar to Japanese yen to stabilize between 157 and 159, with the market remaining skeptical of aggressive tightening. The bullish scenario for the dollar sees the BOJ maintain a dovish stance, emphasizing domestic economic weakness, potentially pushing US dollar to Japanese yen past 160 and testing 162, which might prompt intervention from the Ministry of Finance. Finally, in the bearish scenario for the dollar, a hawkish surprise, like an immediate rate hike signal, could trigger a rapid yen rally, driving the pair down toward the 154 to 155 range as carry trades unwind swiftly. The outcome hinges entirely on the BOJ's message. To wrap it up, US dollar to Japanese yen is at a critical 159.5 level, with oil-driven inflation presenting a significant challenge, and the June BOJ meeting poised to be the ultimate catalyst. Keep a close watch on the 160 barrier, as it represents a multi-year ceiling. What are your thoughts? Will the BOJ finally take action, or will we see the yen continue to slide? Share your insights in the comments below. And don't forget to subscribe for more in-depth explorations into the Japanese economy. See you in the next video.